Welcome back to the show. I'm Foreman, and in this week's portfolio update, I'm going to show you the UK stocks that I bought, as well as the top rising and diving stocks in my portfolio and how well I've done in the first 6 months of the year. And if you like the video, please try one of these to help beat that YouTube algorithm. According to Google Finance, the FTSE 100 is down minus 0.18%. The FTSE 250 is up 0.45%, and the S&P 500 is up a whopping 1.63%. My portfolio, however, is very much outperforming the UK, but underperforming the US, which I suppose overall isn't too bad, seeing as I'm only invested in UK stocks. As we can see, my portfolio is up 0.48%, and this is likely due to a few different factors this week. Although relative, I have likely been underperforming for quite a while now. And quite a few of you have been asking about my returns, and I completely understand, because in this niche, there's certainly a need for transparency. People would like to know my returns, because then what I could say might be worth its salt or it might not be. And that's where it becomes interesting, because I am very much underperforming the markets, and it really depends on what information I can bring from this underperforming. However, I hope that differing myself to the other people that pretend they're doing amazing, they deceive others by saying I'm following these hype stocks, I would rather be underperforming. And I think it's not about the image you have. Don't get me wrong, there is a brand image, but your own image for the sake of your own ego, I think, is absolutely pointless. And there's a reason I've not been mentioning my returns. It's not because I'm in denial about underperforming the markets or I'm insecure about what they really are. In reality, it's I've stopped looking as much. And it could be, yeah, because I've been underperforming for a while, and so looking at that might bring out a negative emotion. But in my opinion, because I've just not cared about it as much, I feel that it's far too short term to really justify these performance and really understand it. For instance, if you look at a great fund manager's track record, usually it's over the last 10 years at least, and then they've got a CAGR of those years combined. I've been investing for about 1 year and a quarter. That's it. So I've really not been investing for that long, and so it really does change things up. According to Freetrade, at the very least, I am very much underperforming the markets. When we look at the maximum duration, which is back to when I first started investing, even 2 weeks beforehand for some reason, we can see that the markets have massively outperformed me. And in fact, my returns were 25.25% in this time period, and that's time-weighted returns. Whereas the likes of the FTSE All-World ETF, which is globally diverse amongst all of the universes of stocks, that's doing around 59.24%. However, you can see that in the last 6 months, my portfolio has just gone from the all-time high in terms of returns and just slowly but steadily decreased. I'm hopeful that this trend may reverse in the future, although this could be a very long-winded trend. In fact, I might be going through my own personal bear market with my specific investments, because I'm only invested in 5 stocks. These stocks could downtrend for the next few years, and so whilst the general markets might be continuing to climb, I may continue to underperform. But this is a time where it tests my discipline, it tests my knowledge, and it really tests whether I'm going to continue buying the dips or whether I just give up, sell and buy index funds. However, instead of looking at performance on such a short-term basis, I've begun to stop looking at it. I've no longer been tracking my portfolio because I know the general performance and I know that I'm generally underperforming. And so I feel that there's no need for it. At least over a longer term period, I'd be able to see more of a CAGR and see how this year is doing. But I feel that through my time in the markets, I'm now starting to understand that whilst you do get these people that have had fantastic returns, for instance, in the last year, this is very much an irregular moment. And I think in a portfolio, you're not always going to be consistently outperforming the markets year on year. And instead, you're likely going to have a few years where you really aren't doing much. And then you might have that one great year that really bumps up the CAGR of your portfolio returns. At least, in my opinion, my portfolio certainly has a lot of drivers for the share price. With Warhammer, or at least Games Workshop, releasing their Warhammer subscription model, this could certainly unlock their earnings and revenue growth. This could also lead to further developments in the TV and animated series, allowing for further use of their intellectual property. We've even got the likes of Boohoo, which is still very much at a low or cheap valuation due to the lack of investments from ethical, social and governance-based funds. they could very much increase. And even if they went back to their all-time highs, that would certainly push me very close to my performance. And then we've also got ARBO Blockchain, a company that is very much down at the moment in my portfolio as I bought nearer the highs. They have the likes of the NASDAQ listing. If that is surely upcoming, and they are well placed, especially as China is certainly banning the likes of cryptocurrency mining, they're based in North America, so there's certainly potential for this stock to be pushing up the portfolio too. And so overall, yes, I am underperforming. Whilst yes, in the last year I've been doing slightly better, I feel I've really got to zoom out on the image and see, let's go further out. Let's see how well I'm truly doing over a longer term period. But for now, I'm not going to make bold claims that this is how I make money and this is how I'm going to outperform the markets, because I'm simply not doing that. And if you'd like to sign up to my stockbroker Freetrade, you can get a free share worth up to £200 when you use my link in the description down below. The top riser in the portfolio this week is the likes of TM17 or Team 17. And the reason why they have done so well and gained by 7.43% in 1 week is due to what I believe is a strong acquisition. They acquired the likes of Story Toys, and an acquisition roughly costing $26.5 million. However, what's interesting about this is the diversification and broadening of the business that this brings. I've mentioned before with Team 17, my bull case is that it was very much a family-friendly set ecosystem of games, and that really anyone can jump in and enjoy it, especially with their arcade style games. You could jump in for a few minutes, have some fun, and get back on with what you needed to do. And that's a style I really like. I even mentioned that some ways they could push towards a more esports orientated business too. But what they've done here has kind of surprised me, but at the same time correlated with what my beliefs of the company were, and that was broadening and diversifying their overall business and really expanding out. And I was talking about apps. I thought the mobile market is very much underdeveloped, and as they've acquired this studio, this focuses on a much younger audience. In fact, very young. We're talking young kids here, and these type of apps are education plus entertainment, or edutation or something. They've got a word that combines the two, and it's not really my thing. Regardless, this is very much a good market to be in. In fact, I believe they forecasted the overall size of that edutainment market cap to be $46 billion, with a CAGR, the growth rate annually as to be expected, of around 26%, showing that this is very much a high growth industry and there's a lot of potential for the future. They acquired an already profitable business, and it's certainly just going to keep adding to their overall results. I do think this is interesting because it gives them that exposure not only into a separate market that they may not have quite unlocked before, but also to the likes of the mobile development areas. These applications are very much a great thing to have, and this business has previously branded with other big names. We've got the likes of Nickelodeon, we've got the likes of Lego. These are some very big brands in the young, or I suppose they've got a diverse audience too, and this is very good that Team 17 is certainly getting connections into these areas. I did actually research them over the last week prior to this acquisition, and I was looking to see, because I hadn't really spoken about them recently, I thought perhaps I'm overlooking them. They were down on my average price, and so I felt, right, okay, I'm neglecting this stock, let me do some research into it. I found that Debbie Bestwick, I believe her name is, and she is the CEO of the business. She's been pretty much running it for the last 20 odd years at least. She has a 20% stake in the company. I'd completely overlooked that. And that's such an important thing to me, because when insiders have such a large amount of the business, it shows massive skin in the game, showing that they believe in the company over the longer term. I've also looked at their financials, and their revenue growth has been fantastic. Their profit margins have been slowing down a bit whilst they have been increasing year on year. The earnings certainly aren't following as much with the revenue, but they've been doing very well. And I think Team 17 is a very high quality stock, and this rise is much justified because they had been stagnating, in fact declining over the last few months. And that's due to the industry itself, because Codemasters was acquired by EA at quite a premium. It pushed up the other video games developers and really left a bit of a feeling in the field. And then as that hype faded away, these stocks started to fall in valuation. This is a stock I'm interested in. I may not buy it at this current price. I would like to do more research on Story Toys. And once I've done that, I may then decide that that would be a good place to build up a position. The top faller in the portfolio, is it really unsurprising at this point, is Argo Blockchain, or ARB. Shares are down 4.59%, and this is due to what I would call a sneaky shareholder dilution. This business has been revolving around a lot of dilutions, and what they've done is they've opened a credit facility in which I believe they're borrowing around $14 million to be repaid in 6 months' time. Now, I understand the risk to reward ratio of this. Some people on one side of the argument are going, this is part of the CEO's strategy for smart growth. Some people, however, think this is just them getting greedy. After all, the CEO shouldn't really care too much about the share price as long as he's bringing in more money. And so there is quite a clash between investors. You've got the bulls and the bears. I'm very much now siding more on a bearish view. Don't get me wrong, this company is well placed. They're in an industry with a lot of growth potential, and I certainly think they are more favourable than the US listed counterparts. However, the issues underlie is the fact that in this industry, they are so dedicated to hodling or increasing the amount of Bitcoin on their balance sheet that I feel they're going to be very unlikely to sell this. This means they're very much taking short-term gambles. This means that in 6 months' time, Bitcoin could be up massively. And this loan facility to help flesh out their Texas facility could be a very wise move. However, in 6 months' time, Bitcoin could be down another 50%, which I'm not predicting this. I'm just speculating and saying, well, this could happen. And yeah, Bitcoin could be down a further 50% from its current price. And at that point, they've then got to sell even more Bitcoin to repay the loan. So what I see is what they are doing is a risk for reward. They could make a lot of money from this if Bitcoin increases. They then would have a lot more on the hodl or the balance sheet, but then they could just be waiting this out. Could be waiting until they're allowed to dilute shares further to then pay off the loan. I think at the moment now is a good time to be securing more debt because with China, they're selling a lot of these GPU assets very cheaply because they've been banned. They either are transporting their operations across the seas or into other countries, or they're selling up. And so there's going to be an influx of cheap equipment in the markets, and Argo Blockchain could certainly take advantage of that if they had the cash position available. They either sold their Bitcoin, or what they are doing is pretty much diluting shares and raising debt. However, they are still very much quiet on the NASDAQ listing. I'm starting to speculate, and yes, as you can see, I am getting more of a bearish view, that perhaps they may never have listed on the NASDAQ. What if, and I'm speculating here, what if they did this just to increase the hype in the shares, to really flesh out their loyalty to the company? Obviously, this would be a great share price driver. In fact, it's probably quite a key word. It's quite I forget the word every time I think about it, but it's quite a strong word to say, look, we're going to list on the NASDAQ. And so people might be like, oh yes, listing on the NASDAQ, there's a lot of potential here. And so this gives us more value to buy the company. When in reality, it doesn't really add any much value aside from Robinhood and Webull investors being able to buy without paying fees. And it does allow them to have fair valuations to their US competitors, but did those US competitors deserve that valuation in the first place? I did buy 100 more shares of ARB. I did this before really knowing about the credit facility, and my position size is certainly very large. I think, in my opinion, it probably wasn't wise that I did this. And I'm going to contradict myself because in the last few weeks, I'd been arguing against Argo Blockchain being more of a swing trade. I was saying, yeah, this is a long-term investment. But then I really didn't think about how much dilutions may need to be taking place and how much capital they're going to raise and how greedy they'll be with the BTC on their balance sheet. That might just be a bit too much risk for myself. But by no means am I going to cash down on this position. What I'm going to do is likely, if the shares rise, I'm going to trim the position, take profits, and likely just leave it as a free ride. I would have to hope at that point the shares hit around £3.80, double my average price, sell out the initial investment, and then just let it run. I think that would be the best thing for me. Then I still have that exposure to Bitcoin, but I can invest that capital elsewhere. And I think that shareholders are at risk of frequent dilution in this industry, as these companies are certainly trying to get the best Bitcoin mining efficiency and return on investments as possible. And maybe this isn't a great long-term investment, perhaps not at least in my portfolio where it has such a high weighting. A notable mention this week is AHT or Ashtead Group. They've gained by 0.3%. And they've managed to maintain their all-time highs. I've spoken about this in the past because I'd been very much conflicted in what to do with this position. And at the moment, I'm speculating on the share price. I'm speculating that since they've had such a fantastic run-up in the last year, that maybe we're going to see a correction. Maybe shares are going to decrease. What's going on? There's a lot of hype around it. I'm aware they are in a massive share buyback scheme, that the quality of the company has certainly been improving in the last year, but deserving a valuation as high as this, at least, is ringing alarm bells in my head, especially because I picked this stock before I look for what I look for now. I look for, in my opinion, higher quality stocks than Ashtead Group. Their market cap and size means that they are also bigger than what I would typically like to invest in, and so I certainly have a more negative view on this investment. And in fact, if I had the cash available, I wouldn't buy shares of this stock at this current price. But the idea of cashing out of this investment is not one I'm comfortable with either. That's because, don't get me wrong, AHT is a good place in my opinion that I've parked my money and I've done well. But perhaps I've just got to let my winners run. Again, I'm speculating on the share price. What I do know is that people that have a greater understanding, far greater understanding than what I have in the markets, they'll know the use and the utilization of a cash position. Selling my Ashtead position could give me a substantial cash position in the portfolio of near 10%. That 10% cash position could be very useful if there are any further dips. However, I don't have the patience or the discipline to have a cash position at least inside of my portfolio because I'd be more inclined to spend it. I also wouldn't really know where to invest it. Don't get me wrong, I feel that Boohoo is very much undervalued to where it could be, especially in the longer term, but they are still such a leap up from my average price. I feel it's difficult for me to want to buy more shares. And there are obviously others in the portfolio like ARBO blockchain, but then I could be increasing the weighting even further, and perhaps I don't need that risk. Games Workshop is very close to all-time highs, a bit too premium for myself, and Team 17, I'd really like to see how the share price levels off after this acquisition and perhaps the hype slows down a bit. I certainly lack that skill of patience and having a cash position, and so yes, I am very much conflicted. I don't necessarily want to sell HT, but then if my only reason for holding it is speculation over the share price, knowing that I have got higher quality stocks in my portfolio, it's certainly battling yes or no, like the angel and the devil on one shoulder. If you're interested in my free UK stocks to buy in July 2021, then click the card at the top right of the video. Thank you for watching. I'm Foreman. Have a fantastic day.